Since July 22nd, Ethereum dropped by a whopping 40% until August 2nd, until August 5th. But since March of last year, till the 5th of August this year, it had dropped by 48%. So clearly, Vinney and everybody else, something has been happening in the market that has brought this volatility.
Yep.
So what are these reasons? And I'm going to explore those right now with you all. So first reason is that last week, US job data for July came in and the employment rate fell below the consensus and the unemployment rate increased by 0.2% to an amount which is 4.3%. So although overall it's going down, but in the last little while, it's been increasing. So last month, the unemployment rate was sitting as 4.3%. But a recent study by Fitch, which just came out a couple of days ago, said that the jobless rate was largely driven by workers joining and rejoining the labor force rather than a meaningful job loss. And permanent job losses are still contained, only making up less than 20% of the increase in unemployment rate. Okay? So these are people going in and out. Now, while hiring rates have slowed down meaningfully, layoffs remain close to a 20-year low, which is a good news. And this triggered a recession indicator called the SAM recession indicator, which in the past has been accurate predictor of recession by 100%.
Oh, wow.
So when people are like, hey, this thing has been correct 100% of the time, and it got triggered again, oh my goodness, there was a panic all over. So I'll show you that indicator. And interestingly, this indicator is available in the US government's website. So this indicator, which is called the SAM recession indicator, it signals the start of a recession when the 3-month moving average of the national unemployment rate rises by 0.5% points or more relative to the minimum of the 3-month averages from the past 12 months. But this time, this indicator was triggered by an increased labor supply rather than the unemployment rate, making this a false positive. And this indicator is actually made by this lady named Claudia. So when people asked, okay, Claudia, Sam, what do you think? This is what she said. She says, our understanding of what is happening right now is so very challenged. And what that means is, and I will be the first to say it as someone who has this rule attached to her name, don't just rely on one tool. She says, don't just rely on one tool. She also says, we are not in recession now, contrary to the historical signal from the SAM rule. But the momentum is in that direction. A recession is not inevitable, and there is a substantial scope to reduce interest rates. So what she's basically saying is, don't just rely on this one indicator that I have. You got to look at other things. And she's saying, recession is not inevitable. Like, a recession may not happen. And she's saying there are certain things you can do. Now, remember, in order for recession to take place, right, certain things have to happen in the economy. What has to happen? The GDP has to continuously fall. But here is the GDP of the United States. This is the Q2. But if you notice, the 3 quarters before, the GDP was going down, right? It was going down. But from Q1 to Q2, GDP started to rise. So if GDP is rising, that doesn't show there's recession coming, right? And the GDP in the second quarter reached 2.8% growth in the US. Even though it was shrinking before, but then it ended up raising. Now I'm going to show you these charts that I have of what happened with inflation in 2021 and continued till 2022, right? In 2021, inflation started increasing right here. So inflation started increasing, leading to a rise in the price of goods and services. And to curb inflation,